Welcome to another episode of the Wealth Building Strategies Podcast. I'm your host, Jeremy Constantino, and today I have an awesome guest for you guys, Taylor Jones. Taylor Jones is the head of acquisitions for Techvestor. So welcome, Taylor, to this show.
Hey, thanks for having me.
Excellent. So let's get the listeners acquainted to you and who is Taylor and how did you get into real estate?
Yeah, lifelong sales guy by trade. Always been in the sales space. When COVID happened, there was a pause in our job. It was on the client facing side, so there was not a lot of client facing meetings in March or April, or even May. Always had an itch for real estate. Not quite sure how I wanted to get in, whether it was wholesaling, flipping, being a realtor, broker, etc. So really did the whole traditional go to bigger pockets, listen to podcasts, watch a bunch of YouTube, read some real estate books, Rich Dad, Poor Dad, a lot of the typical what you would hear from people. Got inspired and kind of worked my way through everything, looking at multifamily, looking at there. And then as a consumer myself from the Airbnb side and short-term rentals, me and my wife have stayed at over 23 different Airbnbs
Oh, wow.
across the US. And we even started back in 2015 was when we stayed in our first one. So had been familiar with it from a consumer side, but never really looked at the economics from a ownership standpoint. And once I saw the background and how the sausage is made per se, I was like, wow, we got to get into this space. And that's where me and the wife personally jumped in and then kind of found Techvestor and onboarded there, and the rest is history.
Fantastic. Yeah. So the rest is history. You guys have last year purchased over 75 short-term rental properties. So congratulations on that
Thank
success.
you. Thank you. Appreciate it.
So did you and your wife buy any properties by yourself or just only with Techvestors?
No, so we started just by ourselves. So, outside of what the fund has bought, we have three of them total.
Okay,
And
fantastic.
like I said, that was kind of our, being in the space, being an operator, we run them, really gave me exposure to the asset class. And, it gets very addicting to want to consume more and acquire more. And that does take capital naturally as you want to grow anything with real estate. So a little tough when you're personally confined to your own capital. And that's where, the opportunity of, having a fund and raising capital to buy short-term rentals is, really what's been exploding and going on with Techvestor.
Yeah, so your story of getting into real estate investing is just like so many of us. That was my first thing. I read Rich Dad Poor Dad. I still got the book right here on my
I,
shelf
I
here.
love it. I love
But
it.
yeah, I actually read Rich Dad Poor Dad via audio cassette tapes back when it first came out. My dad played for it in my car in the car. He would drive me to school in the morning, and he would say he said Jeremy, I got this cassette tape, and we're gonna start listening to this and it's how to invest, and I'm excited. And so he would play it in the cassette player in the car. I don't know how many cars still have cassette tape player recordings in the car, but he played for me, Rich Dad Poor Dad. So that was the spark back in 1990. I don't know, 1996, 1997, whenever it first came out.
Wow, that is that is amazing. Yeah. And once you hear like the cash flow quadrant described
Yep.
and passive income and having your money work for you, it changes your mindset completely.
Absolutely.
And that I think is life changing for a lot of people when they fully understand that.
Absolutely. Yeah. So for me, when I read that, I was in high school and I didn't, and then I went to college. And then after college, then I started to apply it. I was like, okay, well, my very first one would be a flip. So I did my first flip. And then I just started getting into long term rental. So the only thing I knew back then, that was in 2005, was renting out a space to a long term tenant, a year, 2 years. Because back in 2005, there was no Airbnb. And so that concept of short term rental didn't exist. So in your case, why did you get attracted to short-term rental over maybe long-term rentals or over flips or wholesaling? Because when you read Rich Dad Poor Dad, there's a whole world ahead of you as far as we can get into real estate investing. So how was the switch to short-term rental? How did that come?
Honestly, started really looking at yield and opportunity on my cost. And obviously, the dynamic and the landscape has changed significantly in the last 2.5 years. But even back then, when you were just putting apples to apples and you were looking at potential yield on short-term rentals versus long-term rentals, it was kind of eye-opening. Short-term rentals have compressed from a yield standpoint. There's the 30 cash on cash days are few and far between. And it's funny it's a joke and laugh about when the huge inventory rush was in play. But, we got in early and, had a great opportunity. I think the biggest thing was writing that first offer and jumping in. Once we got serious about it, there was probably 2 months of studying, trying to learn every aspect of being an operator. And I think the biggest difference I see a lot of people is that over analysis paralysis, where they don't actually jump in. And don't get me wrong, I didn't know everything there is about operating a short-term rental before we got into the space, but I knew enough not to drown. So that's what I tell people is you got to jump in at some point, just know enough not to drown, or over lever, et cetera. And you'll learn 1,000,000% more than any studying you could do. And so as soon as we got in 3 to 6 months into the space, that's where it really started making sense. You've encountered everything operationally. I'm like, okay, I remember hearing about this or that or reading about it. Once you can apply it, it totally changes the game. And then, scaling up from there, it's just repeating processes that you probably didn't have in place, but you've gone through and you're like, okay, it would have been way better if I had done X on the front end or Y. And so that's where set up some SOPs for how to acquire, how to get it live, how to operate it, et cetera. And it really allows you to grow your own, personal portfolio or on a bigger scale.
Exactly. All right, so let's talk about the company Techvestor and talk about what you do and who is Techvestor. And I guess I briefly mentioned it earlier, but what are some of the things that you guys did last year?
Yeah, so we started a short-term rental investment portfolio. So allow investors who want exposure to short-term rentals, but without having to buy your own, figure it out, renovate it, deal with the cleaning and the turnover. So it's an opportunity to get exposure to the asset class with, passive dividends and payouts from that. And so what we did is we raised capital and we used that to buy properties. We renovate them, design them, furnish them, and then ultimately manage them and rent them out on, platforms such as Airbnb, VRBO, et cetera. And so for us, we scaled last year, bought over 75. And this year we're now in fund two at the recording of this. And we're planning on scaling up to, purchase another 150 plus this year. So
Wow.
for us, it's continuing to grow, scale, and use our advantages that we have to grow and acquire this portfolio.
That's fantastic. I love the purpose of the fund and the company, and that's really to get passive investors into this asset class. Because as a passive investor, or even an active investor, I've been an active investor since 2005, and managing rental properties is a lot of work. It is a lot of work, even on the long term rental spaces and even multifamily. And so, when the thought of having to manage basically a small hotel, it's a small boutique hotel. I mean, it's just one property, but it is treated like a hotel. And in my mind, to think, man, I got to go in, I got to change the sheets and the bedding, and I got to do manage check in and check out, and on a period basis, that gives me a headache. On the long term rental, I'm thinking turnover. I'm happy that they're in there for 2 years. If they're under 1 year, then I'm like, oh no, I got high turnover. But I can't imagine the turnover of just a weekend and then a week and then another weekend. So at first, I was attracted to short term rentals for the fact of the high yield, like you're saying, like, wow, the numbers are incredible. But immediately I got turned off because it's an operational nightmare in my head. So I'm impressed that a company said, all right, great, we're gonna iron out all the processes and give that opportunity to passive investors.
Certainly, and I think for us it was, we're definitely almost a operational company. I joke at times, and you're absolutely right. when you decide to manage one of these, you're pretty much signing yourself up for a miniature hospitality job is what you're doing. So for us, it was putting the right people in the right seats on the bus. And, we're vertically integrated where, like I said, it starts with my department in acquisitions and acquiring the right property, making sure the comps are good, the underwriting checks out, balancing the risk and the upside. Then it goes over to, our project management team and overseeing the renovations that are necessary to make it, an elevated space, where that's paint, flooring, amenities, and then having the designers come in and absolutely crush the design, make it, beautifully aesthetically pleasing, looks good in the photos, so it gets booked. And then we have the full, property management side, handling the guest communications, the turnovers with the cleaners, coordinating any maintenance. So, really we wanted to control the success of the portfolio. And so that's why we kept that vertical integration within the team to really operate this portfolio at scale.
I love it. The whole litany that you just explained, I'm just like, I don't have to do any of that as a passive investor. And so when I heard about Techvestor, it was last year, and I got an email from my network, and they brought the opportunity to me, and I said, I started reading, and I made the decision in my mind within 2 or 3 seconds that I wanted to invest personally. And I just write in, I said, I'm committed, and I'm in however much money I spent. But I instantaneously, as a passive investor, I was immediately attracted to the opportunity. So
Yeah,
let's
and
go
it's
ahead.
kind of the best of both, where you can be a part owner of, a larger portfolio. You get diversification, and, yes, hey, if you own one, it's yours, but you have all the headache that comes with it. And, the great news is too, is with that portfolio, it's not like, oh, you bought a bad one, because there's always that risk if you buy your own and you're like, shoot, I bought the wrong one. Well, now you're kind of stuck with that.
Yep.
Whereas in a blended fund or portfolio, yeah, there's home runs, but there's also singles. And so when you
Yep.
blend that all together, you kind of get that, diversified risk across 75, 100, 200 properties as we scale, versus you're kind of all in on this one. And you're like, cool, I bought my little beach cottage, and I pray I got the right one and I add the right amenities. And for us, we just want to make sure that we're scaling appropriately with all of these different properties.
I love it. In our business, we were planning this year to roll out a fund of long-term rentals. And so I had looked at the different markets across the country, and I was planning on doing about 100 properties scattered across the country for long-term rentals. And so I had my business plan together, and I paused on that because I saw this opportunity. And so now I'm partnered with you guys on this opportunity, because the yield is going to be so much better on the short-term rental than the long-term rental. But the entire purpose for me wanting to do the fund for the long-term rental across the country is exactly that: diversification, those singles and those home runs. And then also what I wanted to do was to the the residential homes across the United States, there's such low supply right now. So even though the prices aren't continuing to rise dramatically like they were in 2020, 2021, it's still a solid investment, and the home prices are going to continue to rise, even if there's some sort of recession or something like that. These residential properties in good markets across the country where there's growth, we're going to see continued price appreciation. And so that the price appreciation is just another benefit in addition to the cash flowing properties.
Yeah, and then you also run into great things like depreciation. So what's really awesome is, that benefit comes in when it comes to, hey, it's one thing to make great yield. It's another when you got to hand over a huge chunk of it to Uncle Sam. So the great thing about having the depreciation plus the yield plus the appreciation built in, you really have all three components, that really go into your total return per se, working with you, where you have physical cash that you can get from the yield. You have the depreciation, which helps you at tax season. And then you have the long-term appreciation, that comes with holding real estate of any sort. And that's really what we want to build, is that great opportunity for investors with all three of them coming together.
Love it. All right, let's talk about your role in acquisitions, and I guess tie it together with Techvestor's proprietary software, in which they analyze, I think, hundreds of thousands of properties each month. So I guess talk about that software, talk about your role, and what markets you're looking in and what kind of properties, and take it from there.
Awesome. Yeah. So our co-founders come from tech. So naturally, we built our own internal software to be able to find, sort, underwrite, and scale short-term rentals across the US. And we have some great data partners to provide us with those inputs. And so what we do is we can take any listing that hits the MLS, any single family home across any market that we input into our software. And then instantaneously, we can underwrite it with a set of operating assumptions that we know from operating short-term rentals, what it's going to cost to, pay the utility bill, to stock it with supplies, maintenance, et cetera. And what that does is allows us to underwrite, like you said, over 100,000 short-term rentals a month.
Wow.
And for us, this is not emotional. It's not like, hey, you see all those lists like best places to buy an investment property or best place to buy an Airbnb. Like, I always laugh at those lists because they're great. They make headlines and people read them. But what we're really after is, what does the data say? And where does the data point us from a yield perspective? And for us, that's where we're going to go. And we're going to see is, where can we buy these single family homes and generate high revenue based off of that. And those are the data inputs that we're constantly using. So for me and our department, we're very heavy on, getting good data, sorting it out, making sense of it, and then making very informed buying decisions. So it's just a huge advantage we have over the common, investor who wants to buy one or 10 even. Yep. Is our data inputs are pretty locked in. And as we continue to scale, we've started integrating our own portfolio data in with the data software. So as we continue to scale, the inputs just get better, more efficient as we grow. And so any market that we want to go into, we're just finding what's that buying criteria necessary to win, whether it's the bedroom count, whether it's the location, whether it's the type of property. And so for us, that's all we want to find is, what is the best thing to buy? Is it a 1-bedroom condo, or is it a 5-bedroom house with a pool? Do we need to have a huge backyard and be on a 1/4 acre? Or can we find something that just looks like this? Is it better to buy a 2-story home versus a 1-story? How far away from town can we be and still be considered, close for guests, and they won't complain that we're too far away? Those are all the things we're looking at on any given city, because they're so variable. And real estate being a hyper local opportunity, we can't take any of these assumptions and move them from one metro or one city to another. So for us, that's what all those data inputs provide is, okay, where is the revenue being made? Is it on the north side of town, the east, the south, the west? What are the top performing properties, and what do they look like? And so, this is a very appealing asset class from a visual standpoint. So for us, we're going to go look at those listings. We're like, okay, why do these top 10 players in the space, what do their listings look like? Are they all, white luxury flooring? Or are they all, do they all have a pool? Do they all have a hot tub? Are they all on the east side of town? What do they all have in common? And then that's what we can pick up on to look for when it comes to what's available to purchase on market from a single family home standpoint. So for us, those are the things we're looking at, with those decisions, and to find the best, highest yield opportunities.
That's phenomenal. So important to make decisions based on data driven decisions. And what my experience has been in the bigger pockets, rich dad, poor dad world of investors is, investors usually get excited. They read the book, they listen to some podcasts, and they pick their strategy. They're like, okay, I'm going to pick Airbnb strategy. And then they go like this. I think I want this part of the neighborhood. Okay, I'll buy that house. And then they just jump right on in. And I'm guilty of that. So when I first started out, I just said, oh, okay, this property kind of makes some sense. And I'll probably get some positive cash flow, and I'll rent it out, and I'll figure it out as I go. So in general, that's kind of what I see is people get excited, and there's very little market analysis, very little data analysis. So I'm impressed, beyond impressed, that you guys and Techvestors have come into this space with tech as your background, and utilizing all the data that's out there to make extremely data driven and important decisions.
Yeah, you're certainly right. And especially as, inventory has ticked up, it's a space where, unlike, hey, you can't just tomorrow get a 250 unit apartment complex on the market and
Right,
add
right,
inventory. That takes years. You could add a short-term rental to inventory very quickly. So
right,
for that,
right.
you have to be cognizant. And some people talk, like, a term being thrown around, to the Airbnb bust, per se. And what I say is, if you just came in and bought a very average home with, plain, exterior and very average interior, if inventory ticks up, you have to understand what people are trending to and what they're
Right.
understanding just from even the
Absolutely.
booking side.
Yep.
So that's why we put in all that effort, have the design team, have the renovation and project management team, have the data inputs. Is, we want to make those really strategic and strong decisions to be able to maximize the yield, the downside protection, the opportunity that's available. And, we want to stand out from the crowd, with our properties and buying the right things and creating good value.
Excellent. All right, let's call that a wrap for this episode of the Wealth Building Strategies podcast. Taylor, any last words on to investors that are looking to get into this market and Airbnb? Any final thoughts?
Yeah, certainly. I mean, we're continuing to grow and scale, and that's what we wanted to do, is provide an opportunity to get into the space to the masses. People can get exposure to this and integrate this in their own personal investment portfolio. Whether, hey, I own some equities, some bonds, or maybe you have a couple yourself, and you're looking for more of that passive opportunity. That's what we wanted to bring to people: is, hey, integrate this into your own personal investment strategy. We'll do all the heavy lifting for you so that you don't have to mess with it, but still give you exposure within your portfolio to this asset class and the great opportunities that it can provide.
Fantastic. Final, excellent words from Taylor Jones. And if you are an investor out there that wanting to learn more about Techvestors and the fund too, I'm going to have some links in the show notes. So go ahead and click on those links so you can learn more from Taylor and myself. And one final note, this fund too is for accredited investors only. So if you're not accredited, you can still learn. You can still go to the investor portal and still view the documents, still view the podcasts, and also there's a great. I did a brief over the shoulder look with Seif, co-founder of Techvestor, where he goes through a deep dive on over the shoulder look of their proprietary software. And so he goes into way more detail on the back end side of their data and market analysis. So go ahead, even if you're not an accredited investor, go ahead, look at the data, get to learn learn how to get into this market. And then accredited investors, reach out to us. The links in the show notes below. And that's a wrap for this episode of the Wealth Building Strategies podcast.